All right. Good evening, everyone. How you guys doing today? My name is Christian Marquez. I am one of the counselors here at Dallas Area Habitat, and I will be talking to you guys about making sets of credit. I want to thank you guys all for joining me for this session. Hopefully, you guys get some information that you guys can use to, be ready on whatever path you guys are when it comes to either buying a house or whatever financial purpose you have, a plan you have going on right now. So thank you guys for joining. Definitely let me know in the chat if you're part of our habitat counseling program here at Dallas Area Habitat for Humanity. And definitely let me know if you have any questions. Again, we are going to have a Q&A at the end, but definitely ask questions throughout the session if you guys feel comfortable or want to ask me some stuff that maybe I didn't touch too much in detail for. Again, we have a Q&A spot at the end, but also you guys have a Q&A in the chat here through Zoom, and then also just leave any questions you guys might have in the chat as well. And of course, let me know if I'm going too fast or if you guys don't see my screen at any time, because I want to make sure we are aware of making sure that you guys can see everything we have going on. I love the turnout. It's a good amount of people here today. So let's get started, okay? So a little bit about here at Habitat. I always like to tell people we want to make sure we do things in order. As you guys can see, we're going to have an agenda today. And of course, a few things we're going to be talking about. The first and most important thing is understanding a credit score, right? We want to know what that is and why it's important. A few of you guys have posted you guys are here for the counseling program. So, you guys are here for training. So you guys have already understood a little bit about the credit scoring system. So we'll touch base about that. We'll also touch base about credit reports, kind of what are credit reports? Do they matter? If all I need to worry about is my credit score, we'll touch base about that as well. And then, of course, the credit reporting agencies, right? What are they doing? Who are they? Why do they exist? We'll touch base about that. And then the fourth one will be what factors determine your credit score, right? Is it just paying stuff on time? Is it just, making sure I pay all my bills and keep a zero balance? We'll be touching base about all that, okay? So that's kind of how the session is going to go today. So I hope you guys are excited. So we're going to have a little poll, but also I forgot to mention too, establishing credit and improving your score. We're going to talk about that as well. We won't have a poll today, so we're going to go into the next thing. So what is a credit score? Does anyone want to be brave enough to put on the chat what is a credit report before we talk about the credit score? What's a credit report? Anyone want to know or want to be the brave person to put it on chat what they would think a credit report is? If you are in a counseling program, you should already know this. So this should be something that we went over in our counsel session if you met with us. All right. I wish I had some Jeopardy music on. All right. I guess no one wants to do that. Oh, yes. Miss Crosby, I love it. It is a list of credit you owe. That is correct. It does show that on your credit report. Anyone else? Credit history. Yes, Julie. Thank you for joining. It is. History of your open accounts. That's correct. That is also that's on there as well. So pretty much lenders use this report to help them decide if they will loan you money, right? They also determine what type of interest rates they use and what they will offer you. Lenders also use your credit report to determine whether you will continue to meet the terms and conditions of your existing credit account. So other businesses might also use this credit report to determine whether they're going to offer you insurance, right? What type of insurance premium you got to pay, right? Even to rent a house or an apartment. And also sometimes even providing for, when you're looking at your credit report, to even give you basic services like TV, internet, utility bills, and cell phones. So if you agree to let any employer as well look at your credit report, they also might also look at that when it comes to making an employment decision about hiring you or not. So that is important for us to know, okay? So things that are in there, people already said it, right? Your credit report has statements that has information about your credit activity and current credit situation. And again, lenders use this report to help them decide whether they're going to loan you the money or not. So what's a credit score? That was an easy one. Anyone want to tell me what's a credit score? We went over credit reports. Now, what's a credit score? A prediction of your credit report behavior. Oh, Amani, okay, I like that response. That's kind of being holistic and kind of thinking outside the box. But a credit score, anyone else want to try? What else is a credit score? Bum, 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 bum. A grade. Yes, Ms. Chambers, a grade, yes. So most credit scores are just a 3-digit number, right? So I tell all my clients that your credit score and credit report It's kind of like a book, right? The title of the book is your credit score, which is a 3-digit number. And then the whole book from the front page to the end is your credit report, right? It has all the history that's going in to identify you as how you are with your finances, right? And so what is a credit score, right? It predicts how likely you are to pay back money you borrowed. So we want to make sure we know, right? It's a 3-digit number, right? And companies use this mathematical formula called a scoring module to create your 3-digit number. And that information that they pull from your credit score determines what that 3-digit number is, right? Now, these scoring models, they're very important to know because they will literally show you that it's not just one credit score, but we're going to also talk about the 3 credit scores you have by the 3 credit bureaus, right? So 3 digits, but just because you have a 600 or 700 with one credit bureau doesn't mean that's the same for all 3. So we'll touch base about that as well. And of course, again, different scoring modules are depending on also what type of agency, right? The first one we're looking at is FICO. FICO goes from 300 to 850. And then that's kind of been around 90% of the businesses that are pulling your credit use FICO. And the new and improved one, which has been out since the late 2000s, is Vantage. Now, this Vantage score is important because it's where you get your Credit Karmas of the world. A lot of your banks give you this free monitoring credit system. And so they use a Vantage score. So you always want to make sure you know the difference between the scoring modules from a FICO to a Vantage score. Okay. Now, why is this important? Again, companies use credit scores to make decisions such as whether to offer you a mortgage, which most people are here for this reason, also to get a credit card, auto loan, and any other credit products. So they use this to determine the interest rate you will receive on this loan or credit card, and also determine the base of your credit limit, and even if they approve you or not. So this is why it's important to know about why credit scores matter. Now, you may have different credit scores, right? We touched base on a second. So it's normal to see slightly different numbers because we have 3 different credit bureaus that verify that, right? So things that matter when it comes to reporting your data is a few things, but we're going to get into some of it in a bit. Before I blew the horse, I go before I keep going. So one thing we want to look at is your credit data. The scores use data from credit reporting companies, and each may have a different reporting, right? So just because, let's say, for example, you have a bank account or a credit card with Chase, doesn't mean they're reporting to all 3 credit bureaus. So that's one reason why you might have a different system. Also, one credit bureau might calculate something differently than the other one, right? They have multiple versions of scoring. So that's why it's important to know the difference between why your credit score is different from all 3. Now, the 3 main credit report agencies, this is something we all want to know. We talked about them a little bit in the beginning. We have Experian, TransUnion, or Equifax. By chance, which one do you think lenders use when it comes to getting you a mortgage score or getting you approved for a mortgage credit, a mortgage loan? Equifax. Okay, Sevan, pretty good. Anybody else? What do you guys think? Equifax. Okay. Experian, Equifax. Okay. Who do you guys think? Who do you guys think they check? Equifax. Okay. Don't be shy now. We're out here to learn. Okay, we're seeing some more Experian, some Equifax. Miss Phillips said all of them. Yes. Okay. So the answer is all of them. So when it comes to getting a mortgage score, people is also known as the tri-merger score. What lenders do is they get your 3 credit scores from all 3 credit bureaus, and they get rid of the best score, they get rid of the worst score, and go with the one in the middle. And the middle score is what they use, not an average. Okay, so they don't add up, your Experian score with your plus your TransUnion score plus your Equifax, and then just divide it by 3. No, lenders always are going to pull all 3, and they're always going to get rid of the best, the worst, and go with the middle one, which that's what we call your mortgage score. Also, in the lending field, it's called your tri-merger credit report. We want to make sure we're aware about that. Okay. Now, what is made up of your credit score, right? So I always tell my clients we want to be aware about this. This is how it's broken up, right? And again, we're talking about FICO because we're looking at getting approved for a mortgage, or just kind of make sure we are aware about getting a credit card or auto loan approval. Most of the time, they're going to pull your FICO score, and that's broken up again from an 850 being the highest your credit score can be to 300 the lowest it can be, right? So if we do the math, 300 minus 850, that's 550 points you can control based off of these 5 categories that make up your credit score. So as you guys can see, the first one is payment history. As you can see here, we have current debt, we have length of credit history, types of credit, and new credit, right? So hopefully you guys can take notes about this. This is going to be the same no matter what bank you go with. No one does things differently. When it comes to credit, this is what they use. These 5 categories is what they use when it comes to weighing in your credit report. So we want to make sure we know what your credit score when we talk about that. So let's get into the details, right? We want to know what is payment. What is first one is going to be payment history, right? The one that weighs the most. And lenders want to know, well, I get this money back, right? That's why they look at your payment history. That's why it weighs so much. So they want to determine, hey, how has this person been doing in the past to pay stuff that they currently have, right? So have you paid your bills on time, right? Do you have any late fees? How late are they? Are they recent? Are they 30 days? Are they 60 days? Are they 90 days? They want to know about that as well. Do they currently have accounts and collections? That does bring down your credit. And if you have collections, that weighs a lot in that 35% category. So we want to make sure we're aware about that. And of course, charge-offs, bankruptcies, judgments, and foreclosures also play a big role. Now, paying bills on time is the most positive impact, right? So I highly recommend my clients so for example, let me take a step back. How do you guys think you guys can pay your bills on time? What strategies can you guys do? Let me know in the chat box, what are you guys currently doing to make sure you guys don't forget about any of your bills or stuff that's on credit that needs to be paid? Give me some things that you guys doing. Okay. Ms. Phillips, you're on it. I love it. Auto pay ahead before the due date. Okay. Auto payments. Yes. Anything else? Anyone else doing anything different? Reminders. Okay. Yes. Using a calendar, paying ahead. Okay. Auto payment, calendar reminder. Yes. Marking your calendar. Yes. Right. No one say anything about a budget, but your budget usually, if you're tracking it once a week, it kind of lets you know where the bills do. But okay, I'm loving it. Yes, that's good information. But yes, all these are good resources, right? So if you are someone that forgets to make stuff payments, or that, again, we're not all perfect, so we're not gonna remember everything, setting up an auto pay, right? Setting calendar reminders, paying it ahead, right? Paying it 1 month ahead will help you make sure you pay this on time. And this will be also keep your score as high as it is possible, right? So great feedback. I love all those options and resources. Now, the next thing we're going to look at is current debt, right? So current debt is kind of your utilization, right? Lenders are asking, what's your capacity? We talk about what is the amount that you have in balances versus your limit, right? Another word they use is called utilization. How much of the limit we're giving them are they keeping on a month-to-month basis? And then from there, right, balance owed versus original loan amount. So we want to make sure we keep that in a basic terms, like saying, hey, if I let you borrow, $1,000, or you have a credit limit $1,000 on a credit card, how much of the balance are you keeping, right? We want to have a good ratio about that. And that in the balance that we always recommend that you never want to have no more than 15 to 30% of your available credit rolling over to the next month. If you go to any financial institution, rather be a bank or credit company or auto place, they'll say, hey, anytime you get credit, you never want to have a balance of more than 30%. We highly recommend that you stay closer to that 15. Me personally, I always tell my clients to stay under 10% of utilization, because this will help when it comes to keeping your 30% of utilization available for your credit score monitoring to give you the best points. So currently, how is everyone doing? Do you guys usually keep it high at the 30%? Do we have it a little bit higher than that? How do we do it, guys? Let me know in chat. How are you guys doing with your credit cards or any payments that you pay on a revolving monthly statement? Are you paying stuff off every month? Are you keeping a balance? Is it 1%? Is it 5%? Is it 10%? Let me know. Okay, Ms. Phillips saying no. Okay. Ms. Crosby said no credit cards. Okay. Staying away from debt. Okay, Julie. They say to have credit, you got to build credit, right? So once a month. All right. Using it once a month. I'm assuming you're paying it off after that. I pay every month. Okay. Yes. Paying it off every month. That's correct. So again, there's no right or wrong. It's really what works best for you. So we want to make sure you guys are aware that you do what's best for you. But again, here at Habitat, we always kind of tell our clients, the less that you have, the better. All right. Seeing people saying pay before the due date. Yes. And that's important to know about the statement date. That is important. All right. So the next one we're going to use is going to talk about your length of history, right? So lenders are asking about your length of history, and that's pretty much to show how long you've had credit and are your credit worthiness is, right? So how old is your oldest account? right? They're going to ask these questions. They look at it based off your credit report. What's the average age of all your accounts, right? At this point, they're adding the oldest account to your newest account, and they're adding all in between to get your average age. And again, we all know that is 15% of your credit score. Again, long history is good, but only if they are in good standing. Just because you have an account for 10 or more plus years, but if there's a lot of late payments, if there's a lot of, high balances, high utilization, that is not good, even though it has a long history, because we know that payment history and utilization is 65% of your credit score. So you want to be aware about that, right? And a pro tip is pretty much leave your credit cards open with a zero balance, even if you don't use them, right? You want to maintain the credit history associated with that account. So people say, hey, my first credit card is when I first got it in college. It has a balance of $300 credit limit, or a credit limit of 500 or 1,000. And I have all these other credit cards that have a larger amount. That's fine. But because of the 50% weighing on the average age, that one card that you opened up 10, 20 years ago has so much power at that point, as long as it has good history, that we want to make sure that we always keep that open. Unless if there's any fees, or if you see that there's, not really any benefits other than that, your average age has gone up a lot better with other ones. So the options are available to you depending on what you want to do. So we want to make sure we're aware about all that. Okay. So again, do not open up the first credit card you open, because that definitely helps you with your average age, which is 15% of your credit score. Now, types of credit, right? We know type of credit is 10% of your credit score. So lenders want to see, can you manage different types of credit, right? So these are things like, what do you guys think? What are the types of credits are we talking about here? Let me know in the chat. What do you guys think are some types of credit, right? Because we talked about credit cards, so I know that's one, but what else are other types of credit or trade lines that we add? Okay, loans. Yeah. Installments. Okay, what type of loans, what type of installments? Let me know a little bit more detailed. Car loans, yes. Car payments, yes. Okay. Car payments, yes. What else? Student loans, yes, Ms. Jackson. That is correct. Right. So a mortgage, yes, Esteban, that's correct. Right. Usually to get over 800, you have to have mortgage or have a mortgage loan for most people. Right. But sometimes you can do it without if you have good age and everything else. Student loans, credit cards, yes, that is correct. Right. So these are types of credit trade lines that are going to be on your credit report. Right. So we have credit cards, we have auto loans, we have student loans, and we have mortgages. Right. These are different types of credit. And so we talk about that diversification when it comes to your credit report. We want to make sure we have a little bit of each. Right. So people say, hey, Christian, I can never get over 600. I can never get over 650. I can never get over 700. Well, that might be because of the fact that you don't have that diversification, right? Or you're not hitting all the buckets in the categories that will make up your credit score reach that next goal of 700 or 750 or 800. So it's always good to kind of have a little bit of each one. And again, this is also known as trade lines, okay? Now, keep in mind, we're going to talk about new credit. So when we talk about new credit, that is new inquiries, or is also known as hard pulls or hard inquiries. We want to make sure we know the difference between that and a soft inquiry or a soft pull, because soft pulls, soft inquiries do not hurt your credit. Hard inquiries, hard pulls do. Okay. And lenders are asking, what's their cash flow, right? We want to know, okay, hey, are they applying for new cards? Means, what are they needing a lot more cash now? We know it's a hard pull and inquiry. This will result in a decrease in your score, but hey, do they need that much money? Are they in a financial trouble where that's why they're applying, because they're not knowing how to manage the money? That's something they look at, right? Again, hard pulls do affect it. It also may, again, we hit the nail, right? It may indicate that you are in need of cash. So this might also affect you if you're applying for 10 different credit cards in 10 different months, right? Now, we know in the mortgage field, if you apply for one mortgage within a 30-day window, you can apply for a few others because you only get one ding, right? When it comes to the auto industry, is a lot different. And then, of course, when you're applying for credit cards, there also is a different system they use when it comes to inquiring how many pulls you get. So again, just keep in mind that does hurt your credit. So I want to make sure you guys are aware about that, because that's 10% of your credit score. Now, we're going to have a poll, guys. Okay, so definitely use your chat. Let me know if you have any questions. We're going to have a true or false on these few things here. Okay, so the first one is the importance of good credit. Okay, now we're going to talk about interest rates, employment history, leasing and renting, establishing utility services, insurance rates. So out of all these here, right, we're going to go back from one by one. Does interest rates is determined by your credit score? Yes or no? True or false? They will determine your interest rates. Oh, yes. So true. Okay. True. Yes. Okay. Yeah. We all know that, right? Because not only they determine if you get approved for the product, but also at what rate, right? So, yes. Now, employment. You think that your employment will look at your credit score, credit report? Okay. We have some falses. We have some truths. Okay. False. Yes. Okay. Yes. Okay. I'm seeing a mixture of two answers. Okay. Yes. I see you, Miss Simpson. I see you enjoying it. I see you being here. I appreciate you. Miss Habitat Homeowner. Okay. False. Okay. Yes. True. Okay. So this is a trick question. It depends on your employment, right? Because I currently work for a a nonprofit, but we do finances, right? So my boss might have looked at my credit report, right? It just depends. So this is it depends on the employment because banks, financial advisors, financial planners, certain industries that where you are recommending financial advice might say, hey, if your credit score is not good, how are we going to let you teach other people that or give recommendations? So some employees would. Also, some of them, if it's working for the federal government, in the military, certain clearances you might need, they also will pull that because they want to see how you're doing with your credit because that ultimately is going to hold off on if you're ready to, join this new path in career or even get a promotion or certain clearances that they ask for. So that actually depends on the employment. Now, leasing and renting. Will they pull your credit report for this or credit score? True or false? Yeah, everybody knows about renting. Okay, yes, true. Yes. Mm-hmm. Yep, we can all agree this is true, right? Because they're gonna look at that. That's when they ask for the deposit. They might make you pay a little bit more in rent. So yes, that is true. Now, establishing utility bills. So things like water, light, internet. Is that true or false? Okay, I'm seeing some true, I'm seeing some yes and no. Okay. Giving you guys another 10 seconds to see. I appreciate that. I don't know. I love the honesty, Ms. Phillips. I appreciate that. So this is true. AT&T, T-Mobile, your city of Dallas, you name it that has utilities, they're gonna run your credit because they want to see if you actually have any past due accounts, either with them or any of their competitors. Because at that point, you're not trustworthy, so they will ask for a deposit. So just keep in mind your credit report, your credit score / credit report does matter when it comes to establishing utility services. So or even bills, right? Cell phone, water. AT&T has the next payment plan where you pay your phone monthly. They do check your credit, so that is something that they do verify. What about insurance rates, right? Auto insurance, life insurance. Do you think they check your credit score for that? What do you guys think? Ooh, I love this. No, no, no. And then I saw some yeses, yes, false, false. Ooh, yes, okay. Miss Jackson said true. Miss Simpson said yes. Everyone else saying false. Let's see. Let's see. Okay, we got some more truths in here. Okay. All right. I love the person. And then I like Ms. Vasquez said no. Say, okay. Okay. Yeah, we're good. So the answer is true. They do verify your credit score when it comes to interest rates. Because if you're someone, it's hard to believe, right, guys? When I found that out, I thought I was shocked, but they do check your credit score. And the reason why is because they want to determine if you're someone that's responsible when it comes to driving, right? So they have come up with some type of statistics or experiments where they see that people that have good credit scores are more likely to drive more safe. They follow the speed limit, they follow the rules. So those actually have a better rate. So insurance companies, when you're actually applying for quotes, they actually do take into consideration your credit score. And also for life insurance, even for home insurance, right? If you're someone that's submitting a lot of claims, you're costing that company a lot of money, right? So they're going to charge you a higher premium. And so your credit score is one factor that they look at to determine what type of grade you'll have, right? And so that is important. And you guys want to be aware of that. Credit score not only affects you when it comes to finances, in a figure of speech of just money, but also in other services, right? Like we just talked about in employment, leasing and renting, establishing utility bills, and of course, insurance rates. This all is affected when it comes to your credit score. So we want to make sure we know about all those resources and availabilities of how much credit score really matters. Okay. Now, things you guys can do. If you guys are not part of our program, this is a gym. So I'm dropping this for you guys. Make sure you guys pick it up. Okay. So this is what you guys can do for free. Currently, right now with COVID being around still, you guys can go to www.annualcreditreport.com and pull your credit report from all 3 credit bureaus for free. This is currently happening every week. You can do it for. Usually before COVID, you were only able to pull this once a year by all three credit bureaus. So what I would recommend my clients to do is pull one agency the first 4 months, the second agency or bureau the second 4 months, and then the last bureau the last 4 months of the year. So again, that's something that I recommend. This is cool not only just for you to guys know what's on your credit report, but for you to dispute it, right, and to verify there's no fraud being committed. Again, this is free for you guys, so make sure you guys pick this up, right? This is that www.annualcreditreport.com. This is something that a law they passed back a while back where they want to give the consumers, which we are consumers, the right to be able to look on what's on there, right? Because this does affect us in more than one way. Again, currently you guys can pull it every week. But again, when they stop that, it will be, back to just one pull from every bureau for every year. Okay. So I want to make sure you guys are aware about that. Now, a few things I want to make sure you guys are aware of, that this is not going to not include your credit score, right? So we have a credit report and we have our credit score. This is just your credit report, which is the whole book that we talked about earlier, right? The history from your accounts that have been on there for the last 7 years, and even things that maybe are supposed to be on there even for 10 years, depending on if you had any bankruptcies or any liens or any judgments that might be on there as well. Okay, so we want to make sure we're aware about that. But this came because of the Fair Credit Reporting Act, and it's one of the provisions that they have on there. Okay. Now, again, this is something I mentioned earlier that there's free currently. This is an update, so it's free currently till April 2022. We haven't updated it, but it is currently free, I believe, until at least the end of this year of 2023. So I want to make sure you guys are aware about that. All right. Now, a few things that you guys want to be aware about. So there's types of accounts, right? This is stuff for you guys to be aware of and to use responsibly, right? So as a person that's either eligible to have a credit score and also build credit, you have the option where you can be an individual, where it's account that's under you. You can have a joint account where if it's you and a partner, or you and a spouse, or you and a friend, you guys can have a joint account. Or my favorite, which is a gym, is getting on as an authorized user, right? So we all been there where either we haven't been good with our credit or we've been working on credit. Sometimes if we have a family member or cousin that we can vouch for, right, that is doing the proper things when it comes to credit, you might want to ask them, hey, can I get on as authorized user? That will definitely help you boost your score. Now, there is a catch-22, right? If they also have bad credit, right, don't ask to be added on that, right? Because at that point, if you're trying to get on there to build credit and they have even worse or bad history, you also will get all the bad information. So we want to make sure we're doing this strategically. So definitely just make sure that you guys have those adult conversations with those people that you're talking to about whatever option you guys decide to go with, right? Also, be careful about co-signing, right? Because you might co-sign for a family friend, a loved one, a spouse, a partner. And if they don't pay the bill, you are responsible for it. So just want to make sure you're aware about that, because that is something that a lot of times we see and people don't understand how that can affect you as well. Of course, payment arrangements, you have the option where depending on what type of account you have, they will be considered installments. Some of them will be considered revolving. And of course, a lot of them will be what's called open 30-day accounts or net 60 accounts. Those are the type of way the accounts are set up. Okay. Now, I won't discuss the co-signing because, again, we are doing this to the live where you guys don't have the option to get on here and talk. So I'm not going to get into the details about that. Okay. But again, just keep in mind when you come to co-signing, that can affect you. So just make sure you guys are covering all your bases when it comes to, either signing for someone or getting someone to co-sign for you, or you're co-signing for someone else. Now, non-traditional or alternative credit. This is for a lot of clients that either are not familiar with credit or they don't have the time to build credit and they're trying to get a house or some type of services or type of loan in within the next 1 to 6 months. And so what happens is you have the option where some lenders might let you use other type of credit, right? Like a phone bill, a water bill. These are all types of utility services. So sometimes lenders will let you use that, right? But that's because you might have a lack of sufficient credit history. You might only have one credit card, right? Or one auto loan or only student loans. And that just might not be the only trade lines you have, and lenders don't like that. And so that might give you other options. So we want to make sure we know that you also can include your rent payments. That's important. So if you're paying rent, now this can be tricky because if you're renting from a mom and pop's business or someone that doesn't have a sophisticated system, you might not be able to do it. But if it's a big corporation or the Watermarks of the world or the big rental companies or apartment complexes, usually they can report your rent payments, and that is something that you can use to increase your credit as well. Of course, utility payments, we know about that. And then my favorite, because I have kids, is childcare and child support payments. You also can report that. And even gym memberships, that is important. If you go to the gym, you can add that to your credit. Again, this is something as a trade line. It's called the alternative trade line, so we can use that. And then I know someone has cable and Netflix or some type of subscription services. You can also, depending on the lender, can add those as well. Now, again, they don't weigh as much as, traditional trade line like a credit card or auto loan, but these are options you can add as well, and they're considered non-traditional or alternative credit, okay? Now, establishing credit, right? We kind of added at the end, kind of how do we do that? So the best thing is just pay bills on time. This is the healthiest way to establish credit, right? It's just paying your stuff on time. We mentioned earlier, that's 35% of your score. So we want to make sure you guys are definitely, setting the stuff on auto pay, managing your budget, using a calendar, right? Setting up reminders on your phone. All these are cool tools for you to help you set up and establish good credit. And of course, make sure if you guys don't have a checking or savings account, you'd be surprised. A lot of our community members are underbanked, which means that they either have a prepaid service or still get paid by cash. We highly recommend get with the traditional bank or account or a financial institution that's giving you a checking and savings account. So to make sure that that's a way to build credit as well, because once you have that, you can work your way up, going from step A to step B, and then building money. And then of course, if you have to get credit, we can do secured credit cards and then building building your credit from there, not having to use any type of secure or money as collateral. Now, of course, applying for a loan using savings as collateral, I mentioned that earlier, right? So a secured credit card, a bank might say, hey, you have $1,000, we'll give you a loan for $1,000, but we had to use your money in your checking account or savings account as collateral. Some lenders do that, not often the traditional banks anymore, but that is an option. And like I mentioned earlier, apply for secured credit card. I am a big believer, if you don't trust anyone or you don't have anyone that can vouch for you, or you don't feel safe and you want things on your own, I am a big believer in Capital One secured credit card. I highly recommend you guys look into that. They also have the option of doing a pre-qualification page. If you just go on the internet and search for Capital One pre-qualification, you can do what's called a soft pull, right, or soft inquiry, and they can see if you qualify before you run anything, right? And if we know the credit's not where we need it to be, then we definitely can also do the secured credit card, where they usually ask for a minimum of $200 to $500 down, and they use that as collateral, and that will actually help you build credit, which they do report to all three credit bureaus. And usually within 6 to 12 months of you, paying bills on time and not having a high balance, usually they give you that money back or give it to you as a credit. So we want to make sure we know that secured credit cards are important, okay? Now, something I guys wanted you guys know, you guys do not want to open up a new credit account during the mortgage application, right? So this means if, hey, you are with Habitat and you are considered what we call you mortgage ready, right? You're titled as mortgage readiness. You do not want to open up any type of trade lines, right? Not just credit cards, but also auto loans, any personal loans, until you sign for your house. And the reason why is because anytime you apply for new credits, this will affect your credit score and can also determine how much you can get approved for or how much they might ask you to pay down. So definitely, we want to make sure that you talk to a counselor if you are currently looking at trying to improve your credit. Now, if it's part of your action plan, then disregard this important message. But if you're someone that's not in our program and just want to build your credit, definitely do that. But when it comes to applying for a mortgage loan, once you're in the pre-approval process and you're going through underwriting, you do not want to add any new trade lines until after you sign and get title under your name, okay? And that also ties into like, hey, I'm trying to get furniture from a new house, right? I'm trying to get, utility set up. I usually recommend wait or talk to your loan officer to verify if that's going to be okay, because that will hold you up, or this can make your contract and under your loan process not go through, okay? Now, tips for improving your credit score. We talked a little bit about that, right? But if you are new to credit, you want to consider getting a product that's designed to help you establish and build credit, right? There's financial institutions that have and develop an array of products and services that fit whatever might work for you, right? It might be a secured credit card, it might be a credit builder loan, there might be, any other services that might fit in your needs and your lifestyle. So definitely don't hesitate to reach out to lenders and ask, right? There's no dumb question. So we want to make sure we ask them, right? But things you also can do on your end without costing you any money is you can go to the website and get your credit report and look for inaccurate information, right? What you might be a junior, right? Or your mom and your uncle or your mom and your daughter might have the same name, right? Or you and your mom might have the same name, or you and your cousin and your brother might be the first, second, and third, and you guys might see that it's someone's information that's not yours. Always want to make sure that stuff is accurate. So make sure you verify that by checking your credit report. Okay. And of course, consistently paying your bills on time. Again, we hit that a few times throughout the whole session today. Again, make sure you're paying your bills on time. This is important. We want to make sure that you are aware that this weighs 35% of your score. So this does have a big impact if you're not paying it on time. So just make sure you doing that. Okay. At least a bare minimum, better pay something than nothing at all. So make sure we're doing that. And of course, keep your overall debt at a reasonable level, right? And relative to your income. So just because a bank is approving you for $10, $20, $30,000 in a credit limit doesn't mean you have to use that every month, right? If you know your salary is $40,000 a year and you're using $40,000 a month in debt, then we have an issue. Do not do that, right? Just because you give me a credit limit is great, but you guys keep on keeping your debt low, and that's why we highly recommend always use a budget, because that will help you out with that. And then, of course, open new accounts only as needed, right? So, of course, the first couple of years of building credit, you might have to, get a couple of cards or maybe 3 to 4. That is fine, but never just run credit just because they're giving you a promotion, or a lot of these retail stores, just because they give you 10 to 20% off, that might be the best option for you, right? We kind of want to work on building credit so we get those great cards that give you the rewards, right? I talk about the CPR method with my clients. When I think about credit, I say CPR, right? Credit stands for the C, P stands for protection, and R stands for rewards. So we want to make sure if it's not hitting 2 of those buckets, then we don't even want that credit card, right? But if it hits all 3, that's even better. So we want to make sure we're aware about that, okay? And then, of course, manage credit accounts, right? And manage your credit cards responsibly, right? So just because you get approved doesn't mean you can go and spend it. This is not free money. This is money you do have to pay back. So we want to make sure that we manage this properly. So again, if you guys have any questions, definitely make sure you talk to your counselor, or if definitely you have any questions, type it in the chat, or definitely let me know in the Q&A, okay? Because we definitely are about to wrap up. We are at the end. Any questions for me? Comments, concerns, feedback, updates? Now is the time. Any misconceptions, anything you want me to go over that maybe I went over too quickly, do not hesitate to type it in the chat. Dun, 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 dun. All right, Esteban, I love this one. I love this question. Is there a way to erase a late payment on the history? So it depends, and actually it is. Usually if it's one late payment, you can actually call the lender and you can ask them for a courtesy, a one-time courtesy late payment removal, and you'd be surprised. I've seen this where 70% of the time they will do it for you, especially if you just call and say, hey, unfortunately, I just forgot. There was things that were going on during that time frame. You can just say they call it a goodwill letter. You can also do what's called a goodwill letter, but I highly recommend just call and see, because usually if it's 1 or 2, they usually can delete it for you, and that actually would increase your score a lot as well. So yes, there is options, but either calling them or sending a goodwill letter will be great. And always will highly recommend start with the lender, and then from there, go with the other option, which is, just sending it to all the credit bureaus, and it just depends on the account. But yes, that is something you can do. Now, Ms. Evans said, does it affect me if I close my credit cards after having it for some time? So that just depends, right? It depends on what credit card, right? Is it the credit card that you have open the longest? Is it one of the ones in the middle with the average age? Is it one of your newer cards? It just depends. So I tell clients, if it's the oldest card you have, then we don't want to close it. Sometimes you can call the bank, the lender you have, and let's say, for example, that there's an annual fee. You can say, hey, can you guys downgrade me to the credit card that doesn't have that fee? I highly recommend doing that. But just to close it out, if there's no other reason than that, I would just say add an auto payment for a subscription you have, like for Netflix, Disney, Apple Music, a gym membership, and just kind of, use it that way, and then just pay it off once a month. But if it's one of the newer cards, then yeah, I definitely recommend doing that as well. But again, it just depends on your situation, Ms. Evans. Ms. Jackson probably mentioned that medical bills are not considered to be bad debt against. So, Ms. Jackson, I appreciate this message. Yes, that is correct. If you have medical payments, they do not affect it when it comes to your mortgage approval rate or debt to income ratio, unless it's over $10,000. So it's yes and no, right? So as long as you have less than $10,000 in medical payments or less on your credit report, that does not holding you back when it comes to your debt to income ratio. But if you exceed that 10,000 limit, whatever is over, lenders can use that and will add it to your debt to income ratio on the back end ratio. So it doesn't affect when it comes to mortgage score. But if that's the only thing you have in your credit report, right? We mentioned it. If you have no other trade lines, then it also can affect it, right? Because the only thing that's on there is bad. That can affect it. So great question. I appreciate that. Is it true that medical payments? Yeah, I just talked about that. Yes, medical payments are actually on your credit report. There's a law that was passed that they're supposed to be gone by the summer, if they're $500 or less. But again, this is some government works slow, right, guys? So we want to make sure that we don't wait on it. But if you're looking for a mortgage, if it's the accumulation accounts add up to 10,000 or less, that doesn't affect you. Only less if it's more. So we want to be aware about that. So it does. Medical payments are reported depending on the account balance, but most of them, again, when it comes to mortgage approval rate or debt to income matter, it doesn't affect your possibility of getting approved. All right, Ms. Crosby, we said if you pay the settlement payment instead of the full, will that affect the payment history? So that depends on the lender, and depends also on the age, right? So a lot of people don't know this, but accounts that are in charge off or collections, the first 3 years hurt you more than after the 3 years, right? Because most of your accounts are on your credit report for 7 years, or you keep the 7 years of history. So the first 3 years hurt you more than the remaining 4. Again, right? So we do 7 minus 3, that means remaining 4. But during that process, if you do what's called a pay to delete, or you settle for less, that actually can help you, but also affect you depending on the timeline of it. But I always tell my clients that let's work with one of the newest accounts first and then work our way down. But if that's the only account you have and you can settle and increase your score, then I'd rather you settle for less because the damage is already done, right? So that depends on how you want to handle this account and the timeline, right? If they are willing to negotiate and then delete it, I would say do a pay to delete first. And if they're not able to delete it and then settle, then I would go ahead and do that, right? Because if the balance is high, it's better to pay a quarter of it or 30 to 50% of it than the whole amount. And there's the effect of it being negative is still going to be on there, right? So it just depends on your situation and what the lender is offering you as well. All right. Any other questions? Great questions, by the way. I'm enjoying all these questions. Let me know something that you guys learned today or anything you guys are excited about learning or anything that maybe I didn't bring up. Now, as well, again, my name is Christian Marquez. I have added my contact information so that way if you guys have any questions or concerns, if you're not part of our program or just kind of want to get information, you guys are more than welcome to reach out to me directly. I have left my email, my contact number, and my the address, our website for online, so that way you guys are aware about that. What percentage of the population have perfect scores? So that's a good question. There's really, depending on what perfect means, I can go based off a study, right? We can see right now, very low. Yes, Ms. Jackson, right? Very low. That's correct. That is a good question. Let me check for you real quick. So when we talk about perfect credit score, we are talking about 850 or higher than 830. And that is currently based off a statistic that I saw from CNBC, only 1.3% have that good of a score. So if you guys are over 800, you guys are literally the top 10%. But yes, closer to 850 range, only 1.3% of the US population has that score. And that is from a report and survey from CNBC from last year. So, Ms. Jackson, you are correct. The answer is very, very low. So again, guys, so if you guys don't have anything else, my name is Christian Marquez. I'm going to let you guys go. Thank you guys for joining. Let us know if in the top, if you have any other questions or topics you guys would like us to know, any partners you guys would like us to bring in. But if not, I'll stay here for a few more minutes and you guys are good to go. You guys have a great evening. Thank you guys for joining us today. Que pasen buenas noches. Adios. All right. We see a hand raised over here. Yes, Miss Linda. You want to leave a chat? Bye, Miss Simpson. And I hope you're enjoying that house, baby and Bill. I think are you about to move in, right? I'm excited for you. definitely send me a call. Send me an email or give me a call. Okay, I'd definitely like to talk to you more. All right, Mr. Waits, I appreciate it. Closing in mid-April. Okay, okay, I'm excited. Let's go. We can send the recordings. You can actually go once you log in. After the fact, you can go and see this again. Have I heard of Credit Boost Kickoff? Yes, they are. Depending on what product you're talking about with them, yes, they are good because they report to all three. So they are good, Miss Jones. I do highly recommend them. But also we want to look at what else is on your report. Because again, right, sometimes if we have good stuff, we want to just keep that stuff on low and start taking care of the stuff that's kind of are doing a negative impact. So definitely let me know. We can talk about that more and set up an action plan for you about that. Because again, we got to handle this debt in a certain way. But credit and credit booster and credit kickoff are really good ways to boost your credit as well, just like a secured credit card or getting added on as an authorized user.